If you're thinking about gifting some money to your children, helping them buy a house, you need to listen to this episode. We go through all the details of everything you need to think about.
To learn more about how to secure your retirement and all the different elements you need to know, please subscribe to our channel and hit the bell so you'll be notified when we release episodes every Monday. We have helped hundreds of our clients gain clarity and get on the path to a great retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement Podcast. We are excited to talk to you about a topic that we get asked about quite a bit as we help people with retirement-focused financial planning, and that is around the idea that as people have lived a good retirement, they start sometimes thinking, do I want to give money to my children now so I can actually watch them get it and be able to see the joy or see whatever it is that they're going to do with it and not just leave it behind as an inheritance. We've also had the topic, which we're going to tackle today as well. What if I just want to help my child by maybe either giving them some money for a down payment on a house, co-signing for them on a house, or the other one is maybe I loan them the money and then I charge them a nominal interest rate and they just pay me back on payments. Then the loan gets forgiven at my death. So we're going to kind of tackle all of these kind of things to think through. I just had a client in the other day, and that was a topic. She said, I'm thinking about I know my financial plan is sound. I'm kind of thinking about wanting to give some money to my two daughters now just so that I can see them benefit from it and really feel that joy, not just leaving it behind and not being able to experience it. So we're going to talk this through and kind of take us through one idea at a time. So Merce, if you want to get us started, and this is just to really give you context, this is a thought process. This is not rules-based. This is just a thought process.
Yeah, so the first thing I think you want to be thinking about is what is the actual purpose for the gift? Are you trying to help out a child because their finances aren't where you want them to be or where they want to be? So you're trying to help out, whether that's with regular monthly contributions to their daily living or helping them buy a car. What are you actually doing this for? Because like Raiden just mentioned, you could structure some things as a loan, or you could just give some money outright to them, depending on what the purpose of the gift is. And is there an intention for the child to be paying it back, right? Understanding that is going to help you structure it, think it through, and also think of the implications as well.
Yeah, another thing to think about here is your own financial stability. This is the conversation I had with a client the other day. She is in her mid-60s, and her financial plan looks great. And so as we talked it through and we were discussing this idea, we ran all the numbers for her, and it was no problem for her to gift some money to her children. But as we talked through the conversation, what we really came up with is maybe she should wait a little bit longer, maybe until she's in her mid-70s to do this. And the rationale behind it is that we got another 10 years, we could really make sure that the financial plan is stable and that she's not going to worry, because the longer you go, the better we kind of know how we're doing. I mean, because if you think about it, if I give money to the children, I'm not giving it to them with this prerequisite that they got to save it and that if I need it back, they're going to give it back to me. We are gifting it to them, which means it's no longer ours. And so if I put myself in financial jeopardy because I was trying to do that, well, that's not good, because now I could possibly become a burden to my children or become at least a liability to them. And my whole goal is to make sure that I was going to be able to see the joy behind it. So don't do it too quickly, in our opinion, unless you just really know that I've got a certain amount of money that I'm never going to spend. It's just completely off the block.
All right. The next thing to think through is potential tax implications of this gift. So I would break it down to, is there is there taxes due on actually giving the money? And there could not be. One thing to keep note of is every year there is an annual gift amount that is you can give without reporting on your tax return. For 2024, that amount is $18,000 per person. So if I have 3 kids, I can give 18,000 to each one of those kids if I wanted to, without having to report it on my tax return. Once you go above that number, there is a form that you have to fill out to attach with your tax return that now starts to document how much you are gifting over your lifetime, because that number will get important if you're going to be leaving behind something more than, say, 13 million. That's the current estate tax exclusion. If you're going to be leaving behind more than that, then you have to start documenting how much you're giving while you're living, and then they're going to add it to how much you leave behind after you pass, and that's going to have a whole different tax scenario to it if you're above that number. But for most, it's, well, okay, I can give 18,000. Is that going to be taxable? So from an estate tax perspective, no. But from a tax, your personal income tax, now we have to think about what dollars are we actually giving? Are we giving cash that's in the bank? Well, that money's already been taxed, so highly unlikely that that would be taxable to give away, right? Let's just imagine we're staying under the $18,000 exclusion. But if you don't have the cash in the bank, then you start to look elsewhere, right? And let's just go to the example of, you have some stocks and you say, let me sell some stock to give them $18,000 each. Well, now we are talking about tax implications to you. Even if you're using that money for yourself, you would be paying potentially capital gains tax. And so just because you're giving it away doesn't mean you get to avoid the capital gains tax on yourself. Gifting to family, unfortunately, is not a charity, so you do pay taxes there. If you give money to charity, though, that does have tax advantages, and a lot of times that can be tax-free. But if you're giving to your kids, there are no tax advantages there. So where the money comes from is going to be taxable. Go to an IRA. Maybe all of your assets are in pre-tax type of money, like 401k IRA. Any withdrawals that come out of that are going to be fully taxable. So in order for you to get 18,000 net, you may have to take out 22, 25,000, depending on what your income tax bracket falls into. So tax implications, I think you do want to strongly consider, because it's going to affect, while you're living, it's going to affect your taxation more than it's going to affect the person that you're giving to. And, we are very particular about staying in certain brackets, as well as staying away from this Medicare IRMAA surcharge thing. So you don't want a gift that you gave to come back and surprise you in the following years because you went over a certain limit, and now you're being penalized on that for doing so.
All right, I'm going to talk about a kind of a couple of things all bundled into one, and it's kind of this idea of around the estate plan and the family dynamics, and then what my legacy is, because it's kind of all one big bundle there. And here's the scenario that we have had occur sometimes is, let's just pretend I've got 2 children, makes my math a little bit easier. And one of my children, I want to give them some money now because they need a little bit of help. The other one doesn't need much help right now, so I'm not going to gift them money. Well, the idea is if the one child finds out that I've been gifting $18,000, $20,000 a year to this one child, all to help them out, they may go, well, that's not fair at the time of inheritance. And again, this may not get talked about, but sometimes parents and everything want to make sure that everything is fair. So what you can do is that if you're helping a child in some way, maybe you're gifting money to one but not to the other, and you just are trying to help that one child, is you could keep a tally of it and basically have it in writing that that amount is a part of their inheritance to offset the one child who didn't get anything while you were alive. So that's just something to keep in mind. That kind of keeps it fair. So let's go back to some simple math. Let's say I had $1 million of estate and I gifted 200,000 to one child over a period of years, and the other child I didn't give anything to. Well, of that money, 200,000 is already going to have been the gift, and then the remaining part is how I would split things up. So just keep that in mind as you're thinking that through, because that is something that gets talked about quite a bit.
All right, so let's transition to now a more specific type of topic around gifting, which is the question that Raiden had the other day in a meeting was, how can I help assist my child with buying a house, whether it's through co-signing, helping with the down payment, coming up with the loan. I think there's a lot of things to consider here. And so, Raiden, why don't you kick us off?
Well, I'm gonna tackle the one that I don't like the most, okay? And that is the co-signing. So you might think, oh, if I co-sign, I'm helping my child with their credit, maybe if they've got a credit issue. The problem with the co-signing is if I'm co-signing just to help them get the house and I don't really want to be financially involved in this situation, you're involved financially, right? So if you co-sign and your child doesn't make the payment, then you're the one they're coming after, right? So you're putting your credit, you're putting your finances on the line in order to do that. Now, if you understand that and you say, hey, even if my child defaults, I will step in and buy this house. And I'm not saying that's inappropriate. I'm just saying you got to have that mentality in place and clearly defined in your understanding before you co-sign. So to me, co-signing is the least desirable out of all of these situations. Now you got the other two, which is I loan them money to buy the house, and we can talk about that structure, or I gift them money. What's a more common one, though, that we get is I've got extra money. I could put the money in the bank and let the bank give me interest, or I could actually just help my child and or loan them the money, but then I'm going to get that back in payment. So maybe we could talk about those that scenario there a little bit, Merce.
Yeah, and I had another one, which is they just need help with the down payment. So, and what the client ended up doing, I figured out, I asked the question of, well, how much are we talking, 50,000, 100,000? They said, oh no, maybe just like 10,000. Once you're below that 18,000 that we've talked about of the annual exclusion and you have the cash available, that's usually going to be the easiest route to go. Just because you write the check if you've got it, if it's not going to hurt you financially long term, you can write the check. And I could write one to my son, and then also my wife could write one to our son, right? So there's two gifts they're given to the same person. That works just fine. So there's a lot of ways where you can get around just the $18,000 amount. Now, when it comes to saying a larger number, right? Now maybe you're loaning 100,000 as a loan, not a gift. Right now, you need to structure that properly. I think for sure you would want to have some legal documentation saying this isn't just some family loan, although it's designed that way. There's paperwork involved. There's signatures on both parties, with an agreement that this will be paid back over a certain period of time with a certain amount of interest attached to it on a regular schedule, just like a mortgage or any other loan would be. You want to make that legitimate so that you can avoid the gifting type of scenario that can go against your estate tax exclusion. So I think understanding the loan piece of it is important. I think that can be a good way to go if it's really you're just trying to help them get started, but they've got good jobs and they've got the ability to pay it back. They just don't maybe have the credit right this moment to leverage themselves as well as expensive as the house is, or maybe they just don't have the down payment saved up, but they've got a good financial future. I think that could be a very viable option. You just got to think it through and get the legal part down.
Yeah, the one thing on that is when you come to, so again, go back to what we're talking about here. We're trying to say I'd like to give my kids money, and I don't want to have to report this as a part of the estate, and maybe even I want it as a little bit of a cash flow back to me. You do have to charge a minimum interest rate, and that's something that you want to talk to your tax consultant on, your financial advisor, to help you understand. You just can't say, hey, I'm going to give you this as a zero interest loan, because that now looks like a gift, right? It is a gift, right? So what you want to do is say, no, I'm going to charge a minimal interest rate, and there is a calculation on that of how we can do that, but I could charge that interest rate. Now I can say it's interest only. They don't have to give me back principal. I could just say you're going to give me the interest every year, or I'm gonna amortize it over a 30 or 40 year period. I could do that. The other cool part is I could say, hey, here's $100,000. I'm gonna finance it for you. We're gonna charge an interest rate. You're gonna make payments back to me. But then what I can have in the paperwork that at my death, the remaining part of the loan is forgiven, right? So now it's just an inheritance. So there are ways to structure this where this is not a debt that your kids have to carry on after your death. But there's some advantages there in a couple different ways. One, you could be getting some income yourself with earning interest on your money. The second one is it's a little bit easier for your children sometimes, especially with current tax rates. Current interest rates. You might be able to give them a better interest rate because your math is not going to be the same math as a mortgage company would. You're not going to probably charge them closing cost. So there's some savings there that if you have this extra cash and you want to help them in that way, do it. One little caveat. Think about what happens if you don't pay the bank. What does the bank do? Well, the bank has that house or property as collateral, and it's legal. So I understand that this is your children, but you still want to, Merce said it, you want to have the right documentation in place so that if your child does get into some financial trouble, you're able to kind of come in and like help navigate that. And it might mean, hey, we got to sell the property. We got to fix the situation, because you could find your own self in a very bad financial situation. And so you want to make sure you work with an attorney at least and help you draw up that document. Any other final words there, Merce?
I think we can bring it back full circle on what we talked about at the beginning of the podcast, which is a step up in basis. So I'll give you a quick example. If, let's just say, I have two properties, right?
Hold on 1 second, Merce.
Uh-huh.
Yeah, you're talking about last week's episode of Step Up in Basis?
No, what we were just
Oh, we
doing.
talked about Step Up in Basis here. We
right
just
here.
talked about last week of Step Up in Basis, and I got confused.
Right. Oh yeah. So step up in basis, right? That's something to consider, is that, let's just say I've got property and I have two properties. I have my own house and I have a beach house, right? And the kids love the beach house, and I'm considering they want it, right? And they're gonna inherit it. But I'm considering, well, why don't I just give it to them while I am living, right? And gift it to them while I'm living. Well, you're helping them get a property, right? Which is what we're talking about today. But now you're gifting them outright. And while you think it may be a great idea at the beginning, because now it's off your books, right? It's not anything that you have to worry about any longer, the maintenance or anything like that. But if it's highly appreciated property, we are giving up something very valuable, which is that step up in basis that we talked about in that podcast episode. So you don't want to ignore that. While gifting it can feel really good and it can be something that is very fulfilling, we also want to think about all of the different implications when it comes to gifting or transferring or loaning to our family. So just wanted to bring that up to speed.
All right, we've talked about a lot. If you have any questions on this topic and like to chat with us, go to the website, pomwealth.net, top right-hand corner, click on schedule call. We would love to be able to have a conversation with you around this topic. We actually have software that helps us build this out, lets you see the impact of it to your overall personal financial plan. So feel free to do that. There's also a blog written on this very topic as well, pomwealth.net. Go to the blog page. We hope you have a great week. We'll talk to you again next Monday.
We hope this video has given you some confidence and clarity as you plan for a worry-free life in retirement. But what else do you need? We have created a complimentary video course called 3 Keys to Secure Your Retirement. This video walks you through step-by-step what you need to do to get ready for retirement. You can also check out our podcast called Secure Your Retirement. You can subscribe below.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.